You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Venazzi from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody, that rockin' bit of tunage means it's time to rock out yet again with the Option Block, everyone's favorite bi-weekly source for all things options related. Got a little bit of unusual activity. You want that? We got that. Got a little bit of what's trading, so we got that too. You want a little bit of edumacation? You squeeze that in there as well. Some of your mail, some of your feedback, all sorts of fun stuff. Join us. It's the Option Block. It's kind of fun. My name, as of course, is Mark Longo, and I'm joined by a cavalcade of characters coming from hither and yon all over the place. Let's spin the old wheel again, a metaphorical wheel. Don't ask me to come in the studio and see the wheel. A few of you have asked. It's a metaphorical wheel. There is no big wheel here that I spin, but let's just pretend in our minds that there is. And when I spin it, let's see who I land upon first. Let's go out to the hot seat. Let's go out to the Fidelity hot seat. Let's see who is joining us today. Yes, once again, it is Mr. Colin Songer from the good old Active Trader Strategy Desk. Colin, welcome back to the program. It's been a while, sir.
Been a while. It has been a while. Thanks for having me back on. Yeah, it's, believe it or not, been nice weather and got a chance to catch a game this weekend. So glad to be here, even though it's the hot seat.
Refresh my memory. Are you part of the Jacksonville crew or Boston? Where are you headquartered again?
I'm up in New Hampshire, above Boston.
That's right. I knew you were somewhere in one of those. I forgot New Hampshire, but one of those 3 different areas. We get a broad spectrum of the U.S. here, holding down the Active Trader Fidelity hot seat. And let's spin that wheel again. Let's go out to a place where it's never hot, it's never cold, it's always just right, and the gyros and lemonade are always deliciously tasty. Yes, I'm talking about St. Charles, Illinois, where we are joined by Uncle Mike Tussaw. Uncle Mike, welcome back to the show. And I heard a rumor, I didn't believe it, but I heard a rumor that you were actually in the downtown vicinity last week. Can you confirm or deny that, sir?
I can confirm it. I was at the Option Pit event at the SIBO. Who wouldn't want to go there? I mean, it's reason enough for me to leave St. Charles, and it was a great event. Fun was had by all.
Did you talk at the event?
Briefly, yeah. I did speak. We answered some questions and ate some pizza and talked about options. What's not to love about that?
What is not to love, indeed? The fun thing about it is that crew is always a good. I swung by that event a few times myself. Missed you somehow. Yeah, that's always a good crew of people who enjoy the programming and have all sorts of questions about the shows and all sorts of different stuff. So I'm sure more than a few of them probably called you Uncle Mike, which is which is appropriate. That's what you should be called. And last but not least, holding down the fort, I believe from, sounds like the top of Mount Everest, wherever he is, Mount Hood maybe, somewhere very windy, we are joined by the greasy meatball himself, Mr. Mark Sebastian from OptionPit.com by way of Carmeline Capital. Mr. Meatball, welcome back to the program. How goes your mountaineering?
It's great. I'm in one of the 10 towns that changed America, enjoying the scenic vistas and beautiful catalpa of Riverside, Illinois. And it was a great event last week. I don't know if you want to hold off, but we can get into that right now. Mark, you came out on Wednesday. We did a live podcast at Gibson's. It was you, me, Steve Place, Andrew. We had some steaks. We had some drinks. You got the world famous steak on me, and then to make matters better, then Mike was able to get to downtown Chicago because he had a client meeting and hung out with us for about an hour and a half, 2 hours. We did a Q&A session where, my students were throwing questions at me, Andrew, and Mike, and Mike gave all sorts of great, thoughtful answers. And then, we had some D'Agostino's pizza and did a real quick look at the floor. And Mike, who had not been there in 8 years, was like, wow. It's, I can see why they're selling the building.
It's kind of sad, isn't it, Mike?
It's one to where I remember going there 15 years ago and everybody saying how dead it was 15 years ago. And every year it kept getting deader and deader. And then since I've been in my St. Charles bubble the last 8 years, I had not been there, but it's you got the SPX pit, and that's pretty much it. It kind of felt like some weird ghost town on a movie set or something. It was very, it was quite a unique experience, to say the least.
Yeah, I think unique is one word for it. Sad, a pale shadow of its former glory, maybe other ways to describe it. The literal bones of the exchange are still up there. They leave up the white brackets that used to hold the monitors and the screens. The screens are all gone. The crowds are all gone, but the bones are still there, which makes it even more almost sad in a way. So yes, if you spent some time down there in the go-go days of the crazy time, the height of the madness certainly was the late 90s into the early 2000s, but there were crazy times in the 70s and the 80s and everything as well. You spend any time down there in those time frames, to see it now, it is a bit sad. So let's instead of dwelling on sadness, let's keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the part of the show where we talk about what the heck is trading, what is going on in the world of options, and all of that fun stuff. Coming into Showtime today, it seems like it's funny. They put out a lot of crazy tweets over the weekend. They also put out some good ones right on, I think it was like early Saturday, where Trump says pretty much, hey, trade war in Mexico, kind of off the table, we're good. And that would have been a nice one on to have during the trading day, at least for the bulls out there. We got it on the weekend instead, which means there's always time for the other shoe to drop. And I think the joy, the exuberance got somewhat mitigated, but not a ton. We're still up pretty strong coming into today's show here. The Dow, the laggard, yet again, up a mere 0.6%. S&P up a little bit more than 0.75%, and the NASDAQ pretty much doubling that, up about 1.5%. So just a robust upside in the tech land. Maybe they're saying, hey, all these import duties on things we import through Mexico and produce down there, that's probably a good thing for us. Apple's certainly feeling the love, up about 2% on today's move today. Amazon up nearly 4%. All sorts of big tech names feeling the rally ho. Even Tesla up 9 handles, back north of the 200 level, up about 4. It's like almost 4.5% out there. So a lot of love. Facebook up about 1.5% at about 176 even. So yeah, lots of love across the board out there. All this love means our friend the VIX Cash is kind of interesting to watch all things VIX of late. So we talked about it before on Ball Views. Again, if you haven't listened to that show in a while, I encourage you to check it out. I know a lot of you newcomers coming in all the time, so we love to see you on all the different shows. But that one, we've kind of just been remarking for a while on just how eerily flat the the VIX futures curve is and remains. I mean, you could roll from July to December and actually get paid, which is a fascinating prospect when you look at the last couple of years of the market and how the end of the year has played out here. But today we're kind of, I would never say we put a floor in because that's madness. And I know once you say that, you're going to blow right through it. But it does seem like, at least for the near term, we are kind of hovering. We are kind of sticking around this 16 level. We break through it a little bit, then we kind of bounce right back to 16, then we break through a little bit to the downside, bounce right back. We're kind of in that narrative again, right around 16, like 16 and a quarter right now. So we're maintaining those levels. And we even saw that on Friday again as well. You know, we saw post non-farms. Usually there's a little vol coming out. Going into the weekend, you're going to see some vol coming out. And we didn't really see a ton of that. So it seems like, at least for the near term, everyone's kind of playing the wait-and-see game, and we're kind of hovering at these levels. But still, from where we were about a week ago or so, it's off about 3 handles from there. We're at a little bit north of about 19 and a quarter, at about 16 and a quarter right now in VIX land. Our old friend VVIX has been moving as well. That's, of course, the volatility of volatility, a confusing but an interesting concept nonetheless. That's off about 12 handles from where it was. They're at about an 84.5 coming into showtime. We were at about an 96, almost 97 on our last show. So things have quieted down a wee bit on that front, but still not exactly quiet. They're still waiting for that other shoe to drop. So let's go back around the horn the way we came. Let's go back the opposite of that, let's say. Let's go back. Let's start in the land of very, very greasy meatballs. Mr. Sebastian, sir, what is catching up your tape? What is catching your... And do you agree with that? Do you think like the floor, at least for the near term, is here around 16? I know we picked lower for Friday, but at least for the near term, around these levels?
Yeah, I think you have to look at how much the market's moving around. At the peak of the market today, we rallied 155 points in 5 days. That's $31 a day. To consider, we started at 2740. That's moving about 1.2% a day. That's going to be close to 17% realized volatility. In fact, realized volatility over the last 10 days is over 16. Realized volatility over the last 20 days is over 16. The last 30 days is around 15. So I think what we're looking at is maybe there's a little, this has less than we'd like to think about China and things like that, and more about just the fact that the market is really moving around. It's moving around a lot. That would explain, that kind of explains why we're at this 16 VIX. The market is paying for that VIX. But it also explains why the VVIX would be getting crushed, because with the market paying for the VIX, but on a rally, then there's not a lot of, you don't really, you want to own SPX premium, you don't want to own VIX premium, right? Because if the market slows down, then, that gamma will kind of pop, and maybe, those final couple of moves will pay the gamma. But, yeah, you don't want to own volatility when a lot of volatility exposure when the market is paying for itself. You want to own gamma. And so that is going to kind of explain how VVIX can get absolutely destroyed and start to threaten 80 again, and VIX itself doesn't seem to want to die. Will that last? I don't think the market is going to stay moving at 16.5, 17 vol. But, it's going to take us 2-3 days of not rallying, to maybe even a little bit of a sell-off. We're set up for a 1 or 2 day sell-off of, I don't know, small. Just a little bit of money coming off the table and VIX dropping.
That's how I was feeling too. It does seem like they're kind of pricing in another kind of few moves to the downside here in the near term, right? And then you're right. Then I think once all that's kind of baked in, we might see it might even happen the day of the sell-off, because it's clearly anticipated. But
they've been doing that on all these sell-offs, right? Vol has been perky on the way up and absolutely hated on the way down. So and really, we rallied like a sell. You would normally expect a sell-off to happen, and we sold off more like a rally. We that sell-off we took. We can say. Well, I'll say it was a little faster than the stairs. We took the escalator down and the elevator up, and that's not really what you tend to see on this type of price action. But If I would be, if you flip the S&P upside down, that would be a more normal chart that I'm used to seeing than what I'm currently looking at with it right now.
Yeah, and if you're confused there, listeners, about gamma, where do you get your gamma, where do you get your vega? It's pretty much the rule of thumb is going to be time, right? So the closer you get to expiration, the more you're getting towards the gamma side of the equation. The farther out you go away from expiration, the closer you're getting to the vega side of the equation. So just a helpful rule of thumb if you're new to the show and you're confused by such terms. If you are indeed, I encourage you to check out our Options Bootcamp program. I'll walk you through all that good stuff and a lot more. All right, Uncle Mike, same question for you, sir. We're kind of in this weird kind of environment where, the meatball's right. We are paying for these levels. I don't know how sustainable they are in the long term, but for the near term, these levels around 16 seems to be kind of the norm. We are moving enough to sustain it. It's kind of this weird, kind of wacky, wild macro world we're in. What is catching your eye, sir?
It is a very weird, wild macro world, to say the least. I agree with Marco. It was a great analogy, and that this is a time to where we actually did take the escalator down and the elevator up. You don't see that very often in market moves like this. A couple things that are catching my eye. Just on the somewhat level of certainty, my beloved silver is down a little bit, but that's fine. It's a smaller position as compared to the SPY position.
Oh, do I smell a collar adjustment? Do I ring the collar bell, the collar alarm, collar adjustment alarm? Do we get some action there?
No, I wish we could, but
of course not. I had to ask.
I wish we could, but we don't, unfortunately. So yeah, with silver doing what it's doing, it does seem to display some level of certainty. But with the VIX kind of contradicting that, the fact that we still do have the VIX above 16, with us being roughly 40 points away from all-time highs, does kind of make you scratch your head a little bit with where we're going with it. What's driving this market today, ultimately, I believe, is financials and technology, with XLF up well over 1% on the day. Technology is up as well. Those are the things that are definitely being a big part of where we are going today. And just true to form with this market lately, it's been very gappy. This actually, if you look at the futures from last night, the futures were actually up 30 briefly last night, right at the open. And then they settled down to being plus 15 for the most part in the overnight marketplace. And I'm referring to the S&P futures. But a lot of this move has happened from the overnight trading on the futures. So I think just when you have something like that from a Sunday night, I think it does point to the fact that this is definitely being driven by the Mexico announcement. And then the other thing that I thought was unique today, we actually saw President Trump being on a phone interview with CNBC. You don't actually see him doing a lot of phone interviews on CNBC. So I thought that was pretty neat to watch as well. So I think most of this is macro, as with anything. But the other thing to be very not concerned, but the thing to be very aware of is that we're knocking on the door of the all-time highs in the S&P 500. And whenever we have something like that, you need to watch this very closely. That's what I'm seeing.
All right, and back around the horn again to the Fidelity hot seat. Colin, I'm sure these days markets are moving, things are happening. There's all sorts of different movements, Dow versus S&P versus NASDAQ versus VIX. So I'm sure the phones are lighting it up over there in Fidelity land. What are people calling up to the strategy desk about these days? And what are the Fidelity folks, what are they up to? What are they trading these days?
Yeah, so this is directly from our website. I pulled out, really what the customers are trading. And top of the list was Beyond Meat, made the top of the list here. They hit better than expected quarterly earnings. Their IPO price was $25, and right now it's trading $167.16. So it's up 28.5, over 20%. So pretty amazing that the jump that we're getting out of that. Call to put ratio, when I brought up the option statistics, was for every one call that was being traded, there's 1.05 puts, which is, when you compare that to the average volume, it's 1.24 calls, so one put, based on that average volume measure. So I thought that was pretty interesting. The number 2 spot was held by Salesforce, CRM, and that's based on the headline of Salesforce buying the data analytics firm Tableau Software in a $15.7 billion deal, according to Barron's.com. And right now, CRM is trading right around its 20-day moving average. It's above its 200-day moving average, but it's actually below its 50-day moving average. So price is kind of hovering around that 20-day moving average. When I bring up the option statistics on it, the call-put ratio is 1.6 calls for every 1 put that's traded, compared to an average of 1.51 to 1 put being traded. So a little bit of a higher tick in the call volume. And then next making the list was Advanced Micro Devices, AMD. So they got another buy rating, or reiterated their buy rating from Bank of America, lifting the price target from 35 to 40. So AMD is hitting a new 52-week high today, where that last high was back in September 13, 2018. So, had to turn back the clock quite a bit to see that. So call to put ratio is 2.55 calls to every 1 put that was traded, compared to a 1.62 calls to 1 put based on the average volume. So definitely an uptick in the call volume there for AMD. There is a usual suspect that did make the top 5, which was Amazon. And then the last spot was actually held by, household name Nova Bay Pharmaceuticals, where the headline reads that they offered the Avenova Direct on Amazon. So, which is symbol NBY, that's November Bravo Yankee, and it jumped above all its moving averages. Now, this one doesn't have any options that are available for security, but that's what our customers are trading.
Yeah, it has been a fascinating week. I was looking at Beyond while you were talking. You mentioned it, and you're right up 28, nearly 29 handles just today, up 20%. So up trading at 167.5 pretty much. I will say this, Colin. I had my first Beyond Burger last week, and once I had it, I could maybe see what some of the hype. I don't know if that translates into this exact valuation, but I could definitely see what some of the hype is about. Have you had one?
I'm sorry, man.
No problem. Have you had a Beyond?
He's not, because Colin is a man of the North, and never would he substitute his delicious meatiness with fake pea protein.
It is surprisingly delicious. Colin, have you had one or an Impossible Burger?
No. They keep trying to pressure me, but I like my burgers.
Actually, Mark, I do want to talk about an IPO from Friday. So on Wednesday afternoon, we had my wife, Lauren, of BigBlondeHair.com come in, and she was talking about the back-end analytics of kind of what her business sees. And she was saying that year over year, her business was up 40%. Last year, her Nordstrom's accounted for 25% of her sales. This year, Nordstrom is accounting for 20%, and a company called Revolve Clothing was accounting for the other 20%, and had been less than 10 the previous year. And Revolve actually IPO'd on Friday. The IPO price was 18, and she basically said on Wednesday, when this thing IPOs, I think it's going to go up, because they are really capturing market share from internet, companies in retail that had been kind of making a strong push into internet. And so Revolve opens IPOs 18, opens 25, and it's currently trading about 40. And so, I just think it was an interesting case of, where someone who's really doesn't, my wife is brilliant, but not involved in finance, right? But someone like that who was able to look, and for those of you that are new investing, this is how to invest. She understood what a company did, understood what their edge was, and said, this is probably a name that's going to go higher. And lo and behold, they did. So it was interesting. We probably did kind of 5 big trades at my option pit event, and this was, if not the top, the second best trade of the whole week.
Yeah, I'm not that familiar with it. I'm looking at it right now, listeners. It's Revolve. Ticker symbol is RVLV, if you're not familiar. Hovering right about a 36 right now. But yeah, it went public at, looks like around a little bit north of 25, about 26. So it's up 10 handles. It actually spiked in the interim up to nearly 43, about 42 and 3/4. So it's had a good little run here. Like I said, this is not a name I'm to talk about. Revolve using Instagram and influencers. So there you go, Mr. Meatball. That's obviously a big part of what they're up to. And clearly that approach is working. So maybe an interesting one. Beyond Meat, Revolve. Hopefully all these ones will be optionable in the near future, and we can get going. Even though Beyond obviously is optionable now, but Revolve, not quite yet. Speaking of optionable, let's hit really quickly before we go on into our odd block. Kind of a light odd block today. Not a lot, even though there's some decent volume, not a lot lighting it up. I'm coming in, that's kind of in line with today's day. You know, we're seeing decent moves in the indices, but we've seen this before now, right? When you've seen it before over the past couple of weeks, the market kind of shrugged its shoulders and says, "What else you got for me?" And we're kind of seeing that in the broad products out there. The VIX itself doing about 312,000 contracts, so a little bit shy of half of its ADV. So a decent day, but not huge. SPY about 1.35 million. The ADV is a little bit shy of 3 million. SPX at about 550,000. These are all coming into earlier before showtime, so obviously they're a little bit higher now. But 550,000 contracts. ADV about 1.2 million. The Qs right around 550 as well. The Qs and the SPX are actually almost identical. And the ADV is very similar out there as well. It's kind of eerie how close they were right around the beginning of showtime. IDOM doing about 113,000, aka the Russell. ADV about 250,000 contracts out there. And let's see, what was lighting it up from a top underlyings perspective? Let's scroll on down. And let's see, let's get a fresh one. Let's see exactly what's lighting it up right now as opposed to an hour or so ago. Here we go. All right, so let's see, 2, 4, 6. No numbers on these listeners. I have to kind of approximate in my head. It's a huge chart. Here we go. Number 10 of the top 10 would be Netflix, 120,000 contracts. Number 9, Bank of America, $1.36. Number 8, Beyond Meat, the aforementioned Beyond Meat, $1.45 on the tape. Number 7, Microsoft, 168,000 contracts. Number 6, good old Amazon, $1.71 on the tape. Number 5, Baba, 228,000. Number 4, Tesla, nearly 250,000. Facebook, a little bit north of 250,000, 251,000 for number 3. Numero dos, Apple, 402,000. Number 1, Mr. Colin just mentioned them, AMD, 410,000 contracts on the tape. Looking at the top 10 here, where the biggest bias is, calls or puts, it appears to be Netflix, and it appears to be to the call side. 71% of that, 120,000 contracts coming on the call side of the ledger. All right. Let's keep on rolling now. Get to some. Always really quickly touch on what earnings we have this week. It's still some earnings coming off, even though it's kind of light. Tuesday, Dave & Buster's. So for those of you who are into the adult beverage and/or arcade scene, and maybe you're not down with Chuck E. Cheese, there you go, Dave & Buster's, place for you. Wednesday, we have Lululemon. Another one I'm sure your wife is a big fan of, Mr. Meatball, coming out. They of the infamously sheer yoga pants. I think they moved beyond that now, but it's always fun to say nonetheless. And Thursday, if you're into broad telecom, then Broadcom. It's got you covered over there on Thursday. Also, Duluth Trading before the open. An interesting store. Kind of on the other side of the clothing spectrum from what you were just describing. That is for the hip ladies. I don't think Duluth falls into that camp. But interesting stuff nonetheless as we keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the Odd Block, the portion of the show where we get weird, we get wild. Sometimes we go deep into the less heralded names of the options market. We're going to do that today. We're going to kick things off. Kind of a weirdly quiet day out there, given the fact we're seeing a decent moves in the indices, but again, not a ton. And we're seeing kind of somewhat small, crazy, not really that crazy trades out here in the odd block. We'll see what our Eye of Sauron has delivered for us. I love these little fun live odd blocks because you never know what we're going to get. We're going to see it all, learn it all, discover it all together, listeners. Let's begin our journey, shall we, with everyone's favorite, QuinStreet Inc. Ticker symbol QuinST, QNST. This is a marketing company based in Foster City, California. They do a lot of, looks like SEO strategies. So all that kind of black hat, white hat voodoo on the internet. There you go. QuinStreet. Blame them for it. A year ago, they're trading about 16.5 right now. A year ago, they were trading about a little bit shy of 14, about 13.75 or so. And they kind of rallied. They had a lot of peaks and troughs over that time, up to 16, down to 14, down to 13 again, up to 17, almost 18, then back down to 13 again, then back all the way up to 19, just about 20. 2002 is their high for the year. And then kind of fell off a cliff. That was in February. And they fell off a cliff in February again, back from 20 down to about 13 and change. It's like in the span of like a week. So obviously a rough earnings cycle for them out there in February. And then they dropped down. The low of the year is about 12 and change, which also looks like they threatened it a couple of times. That was in June of last year and then February of this year. So they've had a range from about 12 to about 20 over the past year. Right now about 16.5. So right to the middle / upper portion of that range. Let's see. I'm going to guess all that move. I'm going to guess probably some calls lighting it up. Yes, that doesn't appear to be the case. It was the SEP 15 call, so a little bit longer term, not in the weeklies or anything like that, going up 2,622 times. You know, it's a somewhat quiet day when that's one of the largest blocks of anything in terms of weird, unusual trades that's going up all day. Then you know it's kind of a quiet day. 2,622 of these bad boys. They were, as you might expect, a little wide, given this a less liquid name. They were 225 at 255 coming out. This trade went up for 230, so right off the bid, a nickel off the bid. Opening over there on the SIBO, so looks like has the flavor of a bit of an upside overwrite. The earnings are on the 6th, so this does have an earnings cycle in it, 6th of August. So a little bit of earnings juice baked in to these SEP contracts here as well. Mr. Meatball, looks like a pretty straightforward upside overwrite here. Let's see, SEP 15s for 230, so these are pretty much in the money calls now. An interesting choice, but not a crazy one. So a little bit longer term out to September, a little bit of an upside overwrite, and choosing an in-the-money contract to do so, sir. What are your thoughts and feelings on that one?
Maybe it could be somebody wants out, which can happen sometimes. Could be someone is, just trying to figure out where they can get the most yield. There's a lot of reasons to do a trade like this. The September timeframe is a little odd, but it makes sense to me. I don't think it's a terrible. I do not think this is a terrible trade given the price action of this name.
No, we have seen some cover call overwrites in the money fashion before. I know some people out there who are big fans of that approach. They like that you get a little bit of extra juice from delving a little bit into the put wing there. The SEP time frame is what kind of throws it off for me a little bit, because if you're trying to get out of the stock, you probably would get a little bit closer to the fire. But it's not the craziest, it's not the weirdest. An interesting one. I'm going to probably lean maybe I think that way as well. They're probably trying to get out, but it has the flavor of a decent little overwrite there as well. If they got some stock and they don't mind dumping it at around 1730, which given this chart, I can't really blame them. That's the case. And if it drops, obviously they got themselves protected. Not quite all the way down to where the 52-week low is, but pretty darn close, about $1 away from it. So, again, not the worst trade we've seen. Again, not a lot lighting it up today, so let's see what we can pick. Let's find some other. Let's go obscure. Let's do it. Let's just keep the obscure roundup going. If you said to yourself, when I think obscure, I think of Coupa. Well, then we got you covered here. Coupa Software Inc. This is COUPA, spelled kind of like a coupon, but with an A at the end. The ticker symbol COUP, appropriately enough, COUP. Good day today. This thing is trading right about 125 even, up nearly $4, 385, up about a little over 3%. If you wonder what this is a global technology platform for business spend management. I love these descriptions that tell you nothing about the company. That's written in corporate speak. If you wonder, they're headquartered in San Mateo, which that sounds about right for the name of a company like this. All right, so this company that tells you nothing about what they do. Let's see what they're trading here. A year ago, they were pretty much half, a mere shadow of what they are right now. They're trading about $60, and they've kind of been on a nice long upswing. They got up to 80 roughly back in October last year. Then the sell-off kind of clipped their wings, drove them back down to 60. They're kind of bounced around that 60 range for a while until February. And they started rallying here up to 70 and 75. They got up to 90, 92, 93. And they were bouncing around that 93, low 90s level for a while until looks like about April, late April is when they broke through the 100 into the triple-digit level. And they've kind of been marching up towards 125 ever since. A few spikes here in May up to 113, and then they kind of spiked again recently, right up to 125 where they are right now. So things clearly going well in the realm of Coupa Software. Let's see what we got for this one. Oh, we got some puts. Lighten it up the tape today, which, again, you get a nice little pop. Some puts wouldn't be the worst thing to have in your back pocket, particularly if you're holding some stock. The June 115s were in action today. Oh, not perhaps what I expected. These were 70 cents at 80, so fairly tight for a relatively illiquid name. Going up about 2,200 times on the bid. 70 cents there, about 2,200 times. This is opening also on the SIBO. A lot of SIBO prints going up today on the odd block. These have earnings on the 3rd of September, so no earnings baked into this. That goes like the earnings has already happened for this name here. So on the bid puts at the 150, I was not expecting. I thought there was I was expecting someone was coming in to perhaps lock in some of those recent rallies. Things doubled over the course of the past year, so a few puts in your back pocket. I don't know if June is where you want to go. You probably want to push those out a little bit, but so it looks like it has the flavor of a little bit. I don't see any stock going up with this, so it looks like on the bid, I'm probably going to go out on a limb and say they probably sold these. Go figure. And looks like they did it about 2,200 times. So, Mr. Meatball, interesting stuff. This stop has rallied hard, more than doubled over the course of the past year. 52-week low, actually $52 in that interim. Looks like they hit that right around Christmas Eve, like everything else. So $52 was the low. Now they're trading 125. So it's been on quite the tier to the upside here. And yet someone looks like drawn a pretty aggressive line in the sand at the 115 level. What's your spidey sense telling you about this one, sir?
Whoa. Well, when Coupa and his software are up to misbehaving, they've gone to 125. Mushroom Land needs saving. They sell cash secured puts.
Were you working on that the entire time I was talking about this?
I was working on that. Yeah, it's a throwback to the old Super Mario Brothers.
I had a feeling. Yeah. I had a feeling you were cranking away at something over there.
King Coupa. I'm wondering if they call the CEO the King Coupa. This would be my question.
There would be worse names for him, definitely.
And do they call their employees Coupa Troopers?
Why wouldn't you? Why wouldn't you take all the? If you're going to call your company Coupa, then you got to be a Coupa Trooper. Well, otherwise, what's the point?
Yeah, exactly. And I'm a little disappointed I don't see a turtle shell in there.
When you get to the lunchroom, you have to bounce on your coworkers' heads all the way there.
Yeah, you're definitely not eating mushrooms. Let's put it that way.
No, they can't handle it. You get too big, you break through the ceiling.
Uh-huh.
And the puts are cool too.
Yeah, but yes, they were sold. Yes, cat scared puts.
We could detour into Super Mario Brothers all day long. Quick flash poll: Mario or Luigi? Who you like?
Oh, Mario all day, every day.
I always like Luigi. In the old Super Mario game, when they you fight each other, the original one.
Oh, yeah.
I'd always pick Luigi because I fight my brother in it. He'd always be Mario.
Well, I was a big fan of Captain Lou Albino, who played,
in the show, of course.
Who played Luigi Mario on the show.
If you liked WWF back in the day, or even Cyndi Lauper, then you had to love Captain Lou. Those are kind of his two claims to fame. I don't know what else he did outside of that. But we could segue and digress into all sorts of weird 80s stuff. Let's wrap up here. This name a little bit less obscure. This is Shutterfly. Ticker symbol SFLY. You know them. They're the online photo firm. Let's see what's going on. Today they're trading, good day for them as well. Up about $3.50, trading about 52.5, so up 7% today. A good run for them. But looking at this chart, it's kind of the opposite of a good run. It's kind of looks like they've been clipped pretty aggressively. A year ago, they were trading pretty much double where they are right now. They're trading about $100, almost even, and they've kind of been on a long, slow, looks like death march all the way down here. They bottomed out at around 35 back right around Christmas Eve. So they've kind of rebounded from those lows. Then they bounced back in February to about 45 or so. And then they kind of vacillated around that 40 level for a while. And now lately they've been kind of on the upswing again into the 40s and up into the 50s today. So a good little run recently, but long term, though, over the past year, this chart looks pretty gross. Let's see if the options paper reflects that, what we got here. Bringing up the rear today, the July doubles going up for... I love these prices. A penny, a buck, and then not even a penny, tenth of a penny. So there we go. Great prices. I don't see any splits on it. I don't know how they get these funky prices, but that's a conversation for another day. Maybe they had some stock with it, and that's how they got to play with these prices. But that price is is, I think, absurd on any level. Let's see. This market was 90 cents at $1.45. So you could drive several trucks to that one, listeners, for these calls. So they went up at $1 even. That's actually not a bad price given what this market was showing them. This is opening. Earnings are on the 6th of August, so this does not have any earnings juice in it here. July doubles, let's see, for $1. Looks like Mr. Meatball, they're drawing a little near-term ceiling on the stock, and if it bounces up to 56, they don't mind getting the heck out of Dodge. You on board with that? Oh, I think the Coupa Troopers have got him.
No, yeah. Yes, I'm on board with that.
Are they bouncing on your head again over there, the Coupa Troopers?
Nah, they were. I jumped on one of them and I was running behind a shell trying to take out the mushroom.
Yes, got to stay behind the shell as long as you can. That's pro tip for you listeners from a game from like 30 odd years ago. All right, let's keep on rolling. It's Monday. It's time for a bit of strategy. Right on into the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, listeners, it's Monday. It's time to break down a bit of strategy in the world of options. What better place to do that than the Strategy Block? And you know, Colin, when you were telling me what you thought about and what your suggestion was for the Strategy Block today, I got to admit, I was a little surprised. But, you know, you're not the first one to bring up the subject of box spreads to me, even recently. It's kind of been, you know, for a while there, I know a lot of the trading firms out there were telling me they wouldn't even quote these things anymore. If you're not familiar with listeners, well, Colin will break them all down what they are in a minute. But we used to do them a lot in the S all the time, other places. They're kind of just institutional interest rate carry plays effectively. And we used to, they're very wide. They tie up a lot of capital on the strikes. And that was the problem for a lot of market making firms out there. The capital rules in the space now have gotten so out of whack to any real risk of the position that they just wouldn't even quote them anymore because there was no profitable way to really make markets on these things and actually account for the amount of capital you had to tie up to keep the position on your books. But this is the first time I've heard someone in the retail space telling me that people are interested in boxes. So I'm curious, Colin, what is it that brought this to the fore for you? Are people actually calling up the hot seat there, and are they asking about boxes? Is that what's going on?
Yeah, so it's not as much as we're getting an influx of calls to our desk about this. It's more of we're getting inquiries to our desk, which I'm very surprised that we are. Just for the fact that you brought up, you know, a lot of this particular strategy is very little reward, obviously, for minimal risk.
This might be one of the least retail-friendly strategies I know of. You know, like how many retail guys have a need or a use for a box?
Exactly, and I think a lot of this, I'm wondering if there's some kind of newsletter or something, or some kind of media source that has gone over something like this. I wonder if that's what's been brought to the attention. But we got an abnormal amount of inquiries about this strategy, and basically when selling a box spread is you're selling a call spread and selling a put spread using the same strikes. So you're bringing in a credit. Your risk is basically between those strikes, right? So in essence, what we're talking about, let me give you an example. You sell an 80 strike call. You go out, you buy a 100 strike call. You sell a 100 strike put, and then you buy the 80 strike put basically on the same expiration. And the idea is to bring in a credit for more than the difference of the strike. So in this example, the difference of the strikes is 20 points. The credit you should be taking in is more than 20. Hence the idea being that you got your maximum theoretical loss being 20 points, but you brought in more than the 20 points, giving you that minimal amount that you're bringing in or making on the trade. The issue with that is that a lot of people do get this idea that it's riskless. And this tends to happen quite a bit, where they think, oh, that just means I have no risk on the trade. Well, if there's a reward, remember, there's always a risk. Even if it is minimal, there's still a risk. So I'm here to remind people out there about make sure if it looks too good to be true, it is. As an example, one of the risks involved with this trade, especially on the call side, so if it goes much higher than the strikes that you're using, you know, the idea that assignment on this particular strategy really is a risk involved, especially if it's a dividend payer. That can really be more than the amount of reward you're getting out of the trades. You want to make sure you're keeping that in the back of your mind when opening up these spreads, that you plan appropriately, seeing any events coming down. But one of the things that people overlook, especially lately when it was brought to our attention, to our desk, is that there have been several occasions where the box spreads end up going deep in the money, and especially on the call side. So they end up getting assigned on the call, creating a short in the account, or selling shares without owning them, which means you have to go out and borrow them. It's called short selling. So in case, if these are hard to borrow, we just call it a neg rate, which is it's a rate that's charged for holding short shares in your account, because it is hard to borrow and hard to find these shares and locate. So you have to hold these shares to allow the box spread to play out. Problem is that if your account can't support it, we have to go out and close out the firm or whoever's holding it might have to close out the whole spread. That way you're not holding yourself to additional risk. And if it's deep in the money, that spread between the bid and ask get wide. So now you end up losing money on the supposed riskless strategy. So in essence, you're closing out, you end up losing money on the trade, and that could be more than you expect, unfortunately. And a lot of times when that happens, when people view it as riskless, they tend to lever up the position and buy more contracts than they'd be comfortable of holding those shares in the account. That caused additional pressure on there to over-leverage the account, creating some kind of action on there. So my goal here today is just to educate you, though, even though it is perceived as riskless, make sure that you at least know where the risk is involved, because there's no such thing as a free ride. If there is reward, I can just about close to guarantee there's some kind of risk involved. That's just the way that it goes.
Yeah, that's one of those strategies. You're right. I'm still kind of puzzled as to why retail is calling up. I wouldn't mind digging into that myself and see where people are getting lured to the dark side of boxes, because there's so little gain for the retail guy, and there is some risk at the end of the day that they're probably not familiar with. It's just weird stuff. Uncle Mike, I'm trying to think in all your various blocks of strategery, I don't think you've ever discussed boxes. Do you have any use case for these? Do your clients ever, are they calling you up saying, hey, I want boxes? Maybe everything old is new again these days.
Not quite, but I do have two things to add on the box, just to kind of add to what was just said in terms of if you think whether or not there will be risk or not. A reversal is something similar to a box spread in that you can short stock, sell a put, and then buy a call at the same strike price. And so I had a client call me once. This is like one of my first days working at Options Express. They just had me man the trade desk for an hour or so because someone wasn't there or something. I forget what it was. But anyway, a guy calls me, said, can I get my margin increased? And I said, well, okay, I can look into that for you, sir. But just out of curiosity, why? He's like, I have a guaranteed trade. And I'm like, oh, really? And so he explained to me the trade. And what he was doing is he was shorting stock. He was selling a put against the short stock, and he was buying a call, a reversal. And so sure enough, I do the math. This gentleman is absolutely right. He would have had, based on the maintenance requirement for the short stock, he'd have had a guaranteed 6% within about 2 days. However, there was one problem with that. The stock paid a dividend, and the dividend was coming due. And so once I explained that to him, I said, sir, after doing this math, it is a guaranteed trade. If you put on the trade at these prices, this is what you're seeing on your screen. Yes, sir, it is. So he's like, okay. If you get filled at these prices, it is guaranteed that you will lose 1.5% over the course of a week. And so he didn't believe me at first, but I explained it to him, and then he moved on. So that's one case to where you need to be aware of that. If you just add to the adage, if it looks too good to be true, it is. Second thing I want to say on this is when I've actually done box spreads with retail accounts. So with Reg T, you still are not allowed to get into or get out of a position in the same day. You can't because of settlement issues. So there's occasions that what I'll do is the way with which I'll trade my SPY strategy is that some people are in the strategy doing 2 contracts. Some people are doing several hundred contracts. We all trade side by side. We're one big happy family. But for the people that have money in an IRA that maybe don't have as many contracts, I can't afford to get them day trader status because their account size isn't big enough. So let's say that I put on a put spread one day and it's going against me and I want to get out of it the same day because the market's just moving that quickly. Well, if that's the case, if I close that put spread, then I will get a day trader warning, like any broker would or would give you, because if you make more than 5 day trades in a certain period, then you're basically forced to become a pattern day trader, and you're for the clients that don't have 25,000, you're put on the naughty list. So what I would do if I'm ever in this situation, it's been a couple of years since I've had to do it, if I'm in the situation to where the trade goes against me the same day, what I will do is I will use the calls to create a box spread to make it a riskless trade at that stage, to where, of course, there's expiration risk, but I know that I'm able to end the day without getting my face ripped in. So in that one instance, I have used box spreads only as a risk management tool to overcome the day trader rules. So there actually is a case with which I've used them, and that is it. But aside from that, not a box spreader.
I'm surprised you had that much to say on boxes. It's a very, shall we say, esoteric strategy. You don't hear about it much, but all of a sudden, in the last week or so, I've had a couple people mentioning boxes. Maybe that's some of that. Of course, we're in the rates environment we're in right now. Boxes, obviously, a rates play. Maybe the fact that just rates are on everyone's mind. People talking about boxes. I don't know what it is, but either way, people have some boxes on the brain. Meanwhile, it's time to see what we have on the brain. Let's keep on going into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Not a lot on the calendar this week in terms of numbers. We obviously had non-farm. It's one of the bigger ones last week on Friday, and it was kind of, as I like to say, a bit of a resounding, market not really doing a heck of a lot with it, rallying a bit, but non-farm's not exactly the market mover that everyone's watching these days. Everyone's really is watching still the macro. I touched on the earnings at the top of the show there, so not a ton there unless you're really excited about Duluth. But actually, I'm burying the lead. Breaking news right now, the thing all of us, I'm sure, are going to be glued to our screens for the rest of the week. I don't know if you guys heard this because you're very busy doing a show with me, but the breaking news that is obsessing the world right now, Justin Bieber just challenged Tom Cruise to a fight in the octagon. What do you think about that? Mr. Meatball, who you picking? Cruise versus Bieber. Who you got? He's in stunned silence. He can't even handle the notion of such a just abomination.
I'm gonna take Cruise. I gotta say, I think that guy, he's 5'6". Justin Bieber is probably bigger than that. So Justin Bieber would have the size advantage, the strength advantage, and the age advantage.
But Cruise can climb a skyscraper in Dubai, right? I mean, what can't the guy do?
Well, and let's not forget, he's got Zorg or whoever the leader of
yes.
Justin Bieber's only 5'9". Cruise is about 5'6". So they're closer in size than you might expect. But I could see. I think Tom Cruise is going to kick his butt because Tom Cruise knows all that ninja stuff.
There you go. He's been trained for years.
He probably knows how to throw a punch. Justin Bieber knows how to, let his friends party at his house and annoy his neighbors.
There you go. The breaking options news everyone wants to hear. Aside from your choice in the Bieber Cruise conflagration, sir, what else is catching your eye for the rest of the week?
I really want to see if we get a day or two of calming, or if we're getting set up for a nice kneecapping here on something. Vol's pretty firm today, even though VIX futures are down a touch. But I really want to see some of this realized volatility come off. And so far, we've not seen that.
No, we haven't. And that's going to be, seems like we talked about top of the show, that's going to be kind of par for the course until these things settle off, until we get a little more insight into what's going on the trade war realm. Uncle Mike, same question for you. What are you watching for the rest of this week? And more importantly, who you got in the great Bieber v. Cruz battle of 2019?
You know what? If it's not going to be part of one of a sanctioned wrestling federation like the WWE, then it's just a bunch of fake garbage, if you ask me. So I'm not even going to participate in something like that unless Vince McMahon gets his hand in it. It's garbage, I think, and such things. So I think that Mark's makes a very good point. Let's be aware of a kneecapping. But the other thing that I want to mention is that we're right around the all-time highs, and that is a lot of times that's a tough nut to crack. But if we crack it, it could be a lot more upside, as with any time with all-time highs. The other thing to mention is that we are kind of by a key number in the S&P, that is 3,000. And if we make new all-time highs and then break through the 3,000 mark, things could get exciting. But until we do that, I think those are pretty big roadblocks in the way from a mental standpoint that we got to get through in the meantime. So stay tuned to your Twitter account from the president, because a lot of things could be happening.
Yes, and indeed breaking fight news. That's where it all breaks, apparently, on Twitter these days. Last but not least, Colin, what are you watching the rest of this week, and who do you have in this great conflagration that we hope shall never come to pass, sir?
Yeah, so, I mean, a lot of things. So we have couple, we have PPI, we have CPI coming down the line. So it's something that's just going to kind of see how that's going to be, what kind of narrative that's going to play out for. But I also want to see what comes out of this Mexico deal. I know we've been tweeting about it all weekend, but let's see what really hits the pavement with that. And interesting enough, I know everyone's been saying, I'm just going to pile on. Look, I'm watching what happens with the S&P and the VIX, how this unfolds. Very interesting to see that there has a hard time breaking through the 16 area. It just seems to stick around here, even with this such strong rally. Now, I know there's a lot of macro things happening, but I find it really interesting that it seems to be hanging out in this level. So I really think that this is going to be interesting to watch moving forward.
All right, listeners, a lot of interesting things to watch. Unfortunately, that's going to do it, at least for this show. So, but before we go, actually, we'll do a quick one. We'll do a quick, really, around the horn here, because we're coming up against it here. We've been talking about Bieber too much. So let's go back around the horn really quickly. Let's start with Colin, sir. People are intrigued by all things Fidelity. They want to learn more about what you guys are doing. Maybe they'll call you up and ask you about box spreads. Where should they go? What should they do, sir?
Sure. You could always take a look at our website, take a look at our options offering on fidelity.com/options, where we go over not only the tools that are available to you, but the services, as well as we run online classes to be able to further your education, whether it's dedicated to options, reading charts, all part of the service here at Fidelity. So, and even if you want to talk them over, something where you're thinking through a strategy, like the block spread, you could always give us a call at 877-907-4429. Ask to speak with the trading strategy desk, or you can even throw my name out there. You could always ask to speak to Colin Songer. Love to speak with you and get you on the right page.
There you go. Call up Colin. He'll tell you why you shouldn't be trading box spreads and a whole lot more. Fidelity.com/options is the place to go to pick the tires and light the fires, as they say. Mr. Uncle Mike, they want to call you up, maybe ask why they shouldn't do box spreads. Where should they go? What should they do, sir?
By all means, go to my website for more information, stcharleswealth.com. We'll talk about anything from general investing, even box spreads, if you desire. Feel free to contact me. I'd love to hear from you.
Do it, listeners. Call him up, ask him about box. Make him go off on length about box spreads. Maybe if you can show up at his office, he'll buy you a nice tasty and gyro and lemonade while you talk about box spreads. So there are worse things to do. stcharleswealth.com. It's a place to make it all happen. And last but not least, Mr. Meatball, they missed your big showdown, your big shindig, your big soiree, whatever the heck you want to call it, over there for Option Pit Pro Trader Summit 2019. What else you got up your sleeve for the folks who want to check out Option Pit?
It's always a good day to go to check out our blog, read what we have out there, and check out our services. We're always doing webinars. We have the new Edge Hunter product that is pretty awesome. So come give us a visit and reach out to me, Mark at optionpit.com. If you have questions about option trading, I'd love to talk to you.
There you go. OptionPit.com is the website. Mark at OptionPit.com is the email. If you want his questions and maybe his pro tips for Super Mario Bros., never know, hit him up. He'll regale you with them. And on behalf of the Meatball and Uncle Mike and Colin and the rest of the crew and the Fidelity Hot Seat and indeed myself, I thank all of you out there for downloading, streaming, subscribing, sending in questions, listening live, all that fun stuff. If you are listening live, go get a beverage, hit the bathroom, relax. We'll be back in exactly 27 minutes with some in-studio guests here for a little bit of the old crypto rundown, so stay tuned for that. Otherwise, we'll see you back here on Thursday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.